Hey guys, so in the last week we've all heard of Gamestop and how retail investors are taking up the challenge against giant hedge funds, right? So a little bit of background here. Back in December, the stock price of GameStop was about 13 USD, and just as last week, it soared up to about 300 USD. That's about 2000% increase in price hike. But GameStop's price rise wasn't really derived by any growth in the company. In fact, the company was really severely affected by COVID-19 being a brick and mortar store, right? So this outstanding stock performance has really been a battle between giant hedge funds or short sellers backed by billions of dollars of institutional funds versus retail investors who invest their money in the stock market just like you or me. Right, so to understand what's going on, we really have to understand what short selling is. So, short selling is basically placing a bet that the stock value will decline. And oftentimes, hedge funds they take up short positions and then they use their financial influence to drive the price down. For instance, their market review or outlook growth, for instance. So how it works is that short sellers, first of all, borrow stocks from broker, right? And then they sell it at a high price, which is then expected to drop in the market. And once the price drops in the market, they then buy it and then return the borrowed stocks or shares to the broker. So at the end of the day, the profit will equals to the higher sell price minus the lower buy price. The only difference with normal trading is that here you sell before you buy. So what they do is they stack the odds in their favor, right? And they generate huge profits from this. In fact, multiple hedge funds, right, have been accused of manipulating the market and generating millions and billions in revenue. So the victims every time would just be retail investors. So when retail investors suspected that GameStop was being shortened by short sellers, they decided to take the effort and give the short sellers a taste of their own medicine. So using online platforms like Reddit and also trading platforms like Robinhood, which makes it really easy for anyone to buy or sell a stock, thousands of retail investors got together to try to drive the price of GameStop up high. So over here you have a very peculiar scenario where you have your short sellers that are trying to drive the price down and you have your retail investors trying to drive the price up. So your short sellers are selling off at a higher price, your retail investors are buying at a lower price, right? But at one point when your buy volume from the retail investors goes up, right, the price as well tries to drive upwards, right? And at that time, there's a tipping point where your short sellers cannot take the losses anymore, right? And one of them starts buying, right? It sparks a frenzy of buying from the short sellers to try to limit their losses. So when they buy as well, the price drives up, and over here the retail investors would eventually win if they hold and they keep on buying the stock. So that's what exactly happened in GameStop. So this particular incident in the stock exchange gained momentum, and the ripple effect actually traveled across through Asia, where companies like Top Glove, which are being short sold by main institutions, even with a quarterly net earning or profit of 500 million USD. So this whole scenario really shows you, exposes the world to the tactics used by these giant hedge funds to manipulate the prices of stocks. And it really shows you that the system is really geared to make the rich richer, right? So if one thing Trump was right about was that the system is rigged. Right, so if you like the video, don't forget to give a thumbs up and subscribe to the channel for more content. Cheers.